Hello, I'm Susie Stewardson with the Summit team, and I have a very special guest today, Kris Hocum with First City Mortgage. And First City Mortgage is a subsidiary of Megastar Financial. Hi, Kris. Thanks for coming in today.
Thanks for having me.
So we wanted to talk about down payment assistance because a lot of our clients need some help with the down payment, and they don't know exactly what that means and how much money they need to bring and all the good details.
Absolutely.
So.
Well, there's a lot of really great options, especially here in Colorado, for down payment assistance, and we use two main programs, one through CHFA, which is the Colorado Housing Finance Authority, and one through the Denver Metro Assistance Program. And kind of depending on the current interest rate environment at the time, will depend on which one we recommend. But a lot of them will, kind of the essence of how they work is if we're using them with an FHA loan or a conventional loan, we'll pair that up with the down payment assistance, and it gives 4% assistance that basically covers, in most cases, your down payment.
That's a lot.
It is a lot, and it's really helpful. On a conventional loan, a lot of times, all that's not covered is about $5,000 or $6,000 of closing costs.
Right.
And on an FHA loan, it's about $8,000 of closing costs. And, again, depending on the market, sometimes we can get the seller to help participate for some of that cost.
Yeah, well, usually that's what I'm able to do. What's a minimum that somebody could walk into it? Maybe like $1,000?
CHFA does require you have $1,000 out of pocket, and just had a CHFA FHA client that bought a $450,000 house in Greeley and had $1,000 out of pocket.
That's amazing. That's a phenomenal program. You had mentioned earlier that there's FHA and conventional. So can you explain a little bit what the difference is?
We'll kind of use those programs depending on one, credit score and debt to income, but also they have different income limits. So with the down payment assistance program, there actually is a limit to how much income you can make as an individual or a household.
Okay.
FHA is a little bit more lenient that way than conventional. So sometimes we will go the FHA route just because of the income purposes.
Now, is there substantial difference in credits, or not credit score, but interest rate for those two programs?
Not really. And again, that kind of changes. Conventional CHFA and FHA CHFA recently, the rates, conventional has been slightly higher, but typically the mortgage insurance or the PMI that goes with conventional can be cheaper depending on the credit score.
Okay.
So kind of a wash a lot of times that way.
Okay.
But that will be a little bit more credit score dependent.
I see. Okay. And then what about for the veterans out there? I know that's a totally different program, but
kind of goes in the same route as the down payment assistance. VA loans are by far one of my favorite loans.
Really?
I love them. They're 0% down. In a lot of cases, VA doesn't have a loan limit. Some banks and the different options we have will have a limit up to $1 million.
Oh, wow.
But you could buy, with a VA loan, you can buy a house with zero money down up to $1 million.
$1 million.
There's no mortgage insurance or PMI on a VA loan. And then depending on a veteran's, if they have a VA disability, sometimes even VA's funding fee is waived.
Oh, that's great. Yeah.
But even if it's not, we're about that same $5,000, $6,000
out of pocket,
unless, again, we get some closing
very
cost
affordable.
credit. VA loans are amazing.
Yeah, absolutely. Okay. Do you have any other comments about, like, you mentioned private mortgage insurance. Can you just touch on what exactly that is?
With FHA conventional, unless we're putting 20% down on a conventional loan, you're gonna have to have a premium added to your mortgage payment that protects the bank in the event of a foreclosure.
Okay.
So on an FHA, it's a standard cost. Conventional, it depends on your credit score, the down payment, your debt to income, how many people are on the loan, but basically, it's an extra cost to your mortgage payment that protects the bank in the event of a foreclosure.
Okay, very good. Thank you, Kris.
You're welcome.